I'd like to thank everybody who's reached out and directly messaged me on Twitter. So many fantastic questions, and I'll answer a very important one. How do I deal with losses in this video? Let's use a real and practical example. When we're looking at ADA, you can see here I was buying, here I was selling. What happens when you get volatile price action? For example, something like this. Would you buy this area? The answer is I did, but why did I buy it? And is it actually creating a loss? The answer is correct on both accounts. It's conventional wisdom to cut your losses. You'll see it everywhere. The concept is if price moves against you, you should sell. Therefore, when price moved against me in this ADA trade, and it really moved against me, I was buying. Why was I buying? Because I understood the structure of the market. You always get an opportunity, especially inside crypto with its incredible volatility, to get in and out of a position. And you can see this position was gotten out of. All of these positions, all of these bad buys were erased and turned into good profits in the span of 24 hours. Having been inside financial markets for nearly 4 decades, one of the things that I would recommend to you, pick your market well. I picked the market of crypto because crypto is incredibly forgiving. Crypto is incredibly volatile, so you can buy at structural levels down and you can sell at a targeted rate of return based on what the market is actually doing. And you can see here, I don't stop buying just because price is coming down. I make sure that I move with the market's momentum. And you will find that if you do too, you can turn incredible annualized return on investments. If you're new to that term, you're about to see one of the most mind-blowing things in finance. For example, if you invested $100 in that ADA trade and you made a 3% return, you would say, Ken, that's a useless return to make. I need to make $300,000 in gains per day, for example, or $30,000 or $3,000, but it wouldn't be $3. And what about this low return on investment? That's just useless. Or is it? Let's have a look at this, and I want to introduce you to the term annualized return on investment. An annualized return on investment is completely different to an absolute ROI, to an absolute gain or loss, and the initial investment amount. When you look at an annualized return on investment, if you took $100 and you turned a 3% return each day for a year, you would make 4.88 million % return. This is something that very, very few people know about. Financial experts always focus on the annualized return on investment, not the absolute ROI. When people get into financial markets, they focus on the absolute return on investment. And this is why they fail. Every time you see a red little arrow, that's me selling at an annualized return on investment. That is quite healthy. And you can see there's lots of little red arrows, but there are also lots of little green ones as well. That's where I buy. A lot of people would say, don't buy the falling knife. In fact, the falling knife is one of the most profitable ways to buy. But again, people don't understand this. When it comes to investing and trading, general common sense generally puts you on not only the wrong side of the trade, but the wrong side of the investment, and definitely squashes your annualized return on investment. I developed CTKS trading to optimize annual ROI. Many people say, what do I do? I've bought something and the position turns against me. Did it really turn against you? This is the question that you need to really ask yourself. All of these buys down here, all of these buys, all of these buys, all of these and these were created at a time when the market was retracing. But I sold them all, and this is the key for you to understand. If you're thinking that you're selling on the wrong side of the percentage, if you're holding on to a losing trade, you have to deeply look into what that actually means to you. If you're doing CTKS trading, buying on the negative down price action is the most profitable thing that you could do. But of course you do need knowledge. A lot of people say, cut your losses short and let your winners run. Professionals inside financial markets focus on letting the annualized return on investment be the maximum it could be, but they don't get greedy. It is possible to grow a very small account into a very large account with an annualized ROI. But again, this takes knowledge. So what are the things that you need to look for to get a really good annualized return on investment? The first thing I would suggest, have a look at the 40-year veteran How I Trade, this particular video here, and the questions answered video as well. Both of those videos will give you an exceptional foundation. I made those trades on ADA with Rule 240 in mind, CTKS structure first. You must understand the structural levels on Bitcoin, total crypto market cap, Ethereum, Bitcoin Cash, Litecoin, BNB, XRP, ADA, Doge and Solana in order to trade ADA. This is something that a lot of people don't realize. Typically when people want to trade ADA, Cardano, they'll just get into ADA's chart and they won't look at anything else. This is a huge mistake. In order to set the correct annualized return on investment, you need to know how Bitcoin is going. Bitcoin, no alt, including ADA, can escape Bitcoin's gravitational pull. When you throw the indicator on, you can see that these structural buy levels are very strong. You can buy always into structural support areas and you'll get a very good bounce. Here we've seen that Bitcoin has been making a series of higher lows. That means price is positive momentum on for ADA, but we need to look at total crypto market cap. Looking at total crypto market cap, we can see a number of cutovers. This is really positive for crypto, but we need to be aware of the structural resistance levels, the ceilings inside the market. And these particular dotted lines are called Stanfield levels. They're created through the CTKS method, which marks up all of price history, nearly 3,900 days worth with total crypto market cap. We can see that total is coming into heavy structural resistance above. It's not like this, it's coming into structural resistance. We would expect a pullback right here. And that's actually currently what we're getting. One thing that you will notice over the same period of time, ADA is following Bitcoin's directional correlation. When Bitcoin came down, ADA came down. When Bitcoin went up, ADA went up. One thing that you can note with total crypto market cap coming into structural resistance, we can see ADA is coming down, but Bitcoin is the absolute ruler of the crypto universe. When Bitcoin comes up, all the alts can't help but come up with it. And when Bitcoin is going down, it's the same thing. Therefore, we expect a retracement in ADA, but we also expect upward momentum inside because Bitcoin is coming up at the moment. We need to go a little bit further into it. It's not just sufficient to look at the naked price chart. Oh, how wicked. We need to zoom into this particular area, so that's what I'll do now. The reason that you want to zoom in to recent price action, you need to determine turning points inside the market. We can see when we pop on the service indicator, we can see that ADA had structural support at that 37.98, but as total crypto market cap came into its structural resistance, it's pushed ADA through this. Now this is indicating we could get a move down to this 37.11 mark. These areas of structural support can turn into structural resistance if momentum doesn't flow through. We can also see a bit of a retracement in Bitcoin at the current time. It may move down to approximately this 36,783. We can see Bitcoin is making a series of higher lows. This indicates an uptrend, and it also indicates that price will continue in an upward direction. But the key thing for us, we know that all this structural support exists below Bitcoin. If we were simply looking at this, we would do this kind of analysis. But we're doing CTKS trading, so therefore we need to know where the structural levels are inside the market across all of price history. Not just a couple of weeks, not just a couple of days or a couple of months, all of it. When it comes to CTKS method trading, you're always trying to get on the right side of the percentage. The more percentage gain you make, the higher your annualized ROI is. You're always focused on the highest annualized return on investment that is likely to be received from a position. To understand that, you need to look at structure, and you need to understand where structure is. If we look at ADA structure, we can see that we're coming into a level of support. Hopefully that won't turn into resistance, but it realistically depends on what Bitcoin and total crypto market cap do. We need to keep our eyes on them. But the concept, overall, it's very favorable for ADA to come up. I want to give you a bit of a perspective. If you bought at the current price, or around the current price, and you were expecting a 3% annualized return on investment, which would be 4.88 million %. One way is that you could lean in here, and that's what a lot of people would do. But as we know, total crypto market cap and Bitcoin are currently retracing. It could be wiser to go between these structural levels around here, because it's very likely that we could get a dip down and a push up to this structural level. If we got that, a 3% return buying down a little bit lower, for example around that 37.58, could be very intelligent to do. Don't forget, if we turn that 3% in 24 hours, which is quite common on ADA to do, that 3% just absolute return on investment is a 4.884 million % annualized ROI. It's the annualized ROI that you need to look at, not the absolute ROI. Your focus is to look at the annualized return on investment. If you know what that is, you're absolutely rocketing. You're ahead of 99% of other people. Don't get sucked into all the myths when it comes to trading and investing. A lot of people say, oh, if I only had $10,000 and I put it into Amazon all those years ago, and I would therefore be up X thousand %. Well, how about being up X million %? It is possible. That's what CTKS trading is all about. You don't have to put in a whack of money. Just put in something that is comfortable to you. It could be $50, it doesn't matter. The concept is, this matters, this annualized return on investment. One thing that we talk about inside our community is coffee money trading. You need to start somewhere, and you need to get an understanding of how the market works. What generally people do, if they have $10,000 to put into the market, they put it at one level and they go all in. My definition of this is financial suicide. You do not want to do this. You want to trade like I trade across the top 9 cryptos that are marked up inside the service with their structural levels. At least you know where the support is and where the resistance levels are throughout all of price history, not just recent indicative price, which RIPs your money. People are always seeking the highest absolute gain and never understanding the role of annualized return on investment. It's critical to understand this. Your absolute gain means nothing. Your absolute return on investment means nothing. Your annualized return on investment means everything. I've been recently showing the trades that I make. I just want to help people to understand. A lot of people say, I can't buy or sell anything in this market. It's too traumatic. It's just so negative. But if you look at this is just ADA, and I trade across all the tier 1, tier 2 and tier 3 charts. You can see it's really good, and these annualized ROIs are very impressive. The concept is, many people think that they need to get rid, when they buy something down here, they need to get rid of it, and they think they need to buy something up here when it's just probably starting to turn around. This is the exact opposite way of CTKS trading. When we do CTKS trading, we're looking at the structural levels and buying at or around them, depending on the momentum of the market and depending on the intercorrelation and interdependencies between the Tier 1, Tier 2 and Tier 3 charts. You can see that this is not a long period of time from about the 8th up to today, and what we're looking at is a lot of sells and a lot of buys. These are all high annualized ROIs. When you get into synchronization with the market, this is what is possible. Financial markets are highly counterintuitive. When you get big drop-offs like this is the ideal time to get into the market, and I do it. I put my money where my mouth is. I'm not talking about something hypothetical, I'm actually doing it. And you can see the trade history here. This is just the way the things move. Inside the market, when you're getting in as price is exploding, that is the riskiest time to get into the market. You can see the number of green arrows up here is quite small. Especially when you get a bit of a blow off top, you need to be selling into it if you're using CTKS trading. And CTKS trading is just like swing trading and momentum trading. It's just a different way to trade. CTKS trading is all about the highest annualized return on investment that you can get from placing a trade into the market. As the inventor of this trading style, I'm in a unique position to help you to master it. If you like this video, please just destroy that like button and make sure that you subscribe and ring that notification icon so that you can not miss out on the next piece of knowledge to help you to become incredibly wealthy. If you have any questions about how to do the trading style or anything that I can help you to answer, please reach out in the comments or directly message me on Twitter and I will assist you. Someone asked in yesterday's video, how do I get the Tier 1, Tier 2 and Tier 3 indicators? They are available at the ctksmethod.org website. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.